Hi, I'm Roger Montgomery from Montgomery Investment Management, and welcome to this week's Video Insight. Today we're delving into the recent performance of the retail sector and the surprising turn of events that has left analysts reassessing their bearish forecasts. Equity analysts had cast a shadow of pessimism over the retail landscape, citing concerns ranging from interest rates to consumer sentiment. Many believe that the robust sales seen during Black Friday and Cyber Monday had merely borrowed from the festive season's demand, setting the stage for a bleak January and disappointing early outlook statements. However, as half-yearly results have trickled in, we're witnessing a different narrative unfold. Companies like Cettire, Webster, Scali and JBHi-Fi have defied expectations, with their stock prices soaring by as much as 20% in just the last few days. The market appears particularly buoyed by the positive January trading figures, a stark contrast to earlier projections. Scali and JBHi-Fi, reliant on crucial January sales in furniture and appliances, have reported unexpectedly strong performances. Further reinforcing this optimism, the Westpac Melbourne Institute Consumer Sentiment Index, which jumped 6.2% from 81 in January to 86 in February, the highest reading in 20 months, is also encouraging. While pessimists still outnumber optimists, easing inflation, a belief that the Reserve Bank of Australia has concluded its tightening campaign, and anticipated tax cuts are all contributing to a swing in sentiment. Indeed, JBHi-Fi CEO Terry Smart pointed to the same factors and added easing inflation to the sentiment shared by both consumers and analysts. JBHi-Fi reported a 2.2% decline in total group sales for the first half. EBIT was also down by 19.3% versus the previous corresponding half, and the EBIT margin also declined 159 basis points to 7.49%. The EBIT and NPAT results, however, were 5% and 6% better than expectations respectively, and JBHi-Fi Australia's sales, which make up 70% of group sales, were up 0.7%, materially better than consensus forecasts. Meanwhile, Scali's impressive results and the scale benefits of its strategic acquisition of Plush have caught analysts off guard, leading to a reassessment of sales projections. Scali is a company we've frequently written about the merits of over the last 12 months, and its share price is now 50% higher than our last covering of that company. Its first half 24 results beat expectations, and it reported a re-acceleration in trading momentum during the December quarter. Surprised by the news, analysts are lifting sales assumptions amid gradually improving consumer backdrops. Digital retailers like Cettire and Webster have also delivered stellar performances, with both companies surpassing market expectations. Cettire announced an outstanding first half 24 result. Headline numbers were well ahead of consensus, with net revenue re-accelerating in November and December, lifting half-year sales 89% above the previous corresponding half. The underlying EBITDA of $26.1 million was up 56% year on year and more than 20% above consensus. Over at Webster, the company reported a solid result for the first half of 24 as well. Revenue of $254 million was up 23% versus the first half of 23 and came in 1% ahead of consensus. Cash flow was strong, and EBITDA of $7.5 million was 23% ahead of market expectations. While it may be premature to declare a holiday miracle, it's evident that retailers have navigated the challenges of January with resilience. As we move forward, all eyes will be now on these trends and how they evolve in the coming months. Thanks for joining us this week, and we look forward to talking to you again next week, and continue to follow us on Facebook and Twitter.